Cost classification is at the heart of any effective cost accounting system. It provides the structural framework for organizing, analyzing, controlling, and reporting costs. In this module, you will explore the multiple dimensions and bases upon which costs can be grouped. The module also covers the behavioral characteristics of costs in response to changes in business activity levels, critical for planning, forecasting, and decision-making. Through this module, you will gain the expertise to classify costs according to function, traceability, behavior, control, relevance, and more. Additionally, they will understand how costs behave under different scenarios, especially in relation to volume or activity changes, which is essential for break-even analysis, marginal costing, and budgetary control systems. By the end of this module, you will be able to explain the purpose and importance of cost classification, classify costs using different bases, function, traceability, behavior, timing, relevance, control, etc. Distinguish between fixed, variable, and semi-variable costs. Analyze cost behavior using graphical tools and mathematical models. Understand the importance of cost behavior in break-even and CVP analysis. Use cost classification for operational control and strategic decision-making. Introduction to cost classification. Cost classification involves grouping costs based on shared characteristics. This helps streamline cost tracking, enhance cost control, improve financial reporting, support pricing decisions, and facilitate efficient budgeting. Cost classification aids in accurate product costing, effective cost control, strategic decision-making, variance analysis, and budgeting and forecasting. Major bases for cost classification: A, by element nature, material cost, direct materials, e.g. wood for furniture, indirect materials, e.g. cleaning supplies, labor cost, direct labor, e.g. assembly line workers, indirect labor, e.g. supervisors, security staff, expenses, direct expenses, e.g. special tool rental for one job, indirect expenses, e.g. factory rent, electricity. B, by function, production cost, costs incurred in manufacturing, administrative cost, office and managerial expenses, selling and distribution cost, costs related to marketing, delivery, and sales force. C, by traceability, direct costs can be traced directly to a cost object, e.g., raw materials, direct labor. Indirect costs cannot be directly traced and are allocated based on estimation, e.g., depreciation of machinery used in multiple jobs. D, by behavior, fixed costs do not change with production level. Examples: rent, salaries of permanent staff, insurance, variable costs, change directly in proportion to activity. Examples: raw materials, sales commissions, semi-variable, mixed costs, contain both fixed and variable components. Examples: utility bills, telephone charges, maintenance costs. Graphical representation of cost behavior includes charts showing the different cost curves for fixed, variable, and semi-variable costs. E, by relevance to decision-making. Relevant costs affect future decisions, e.g., new machine cost. Irrelevant costs, already incurred or unaffected by decisions, e.g., sunk costs. F, by time, historical costs, costs already incurred, used for financial reports. Predetermined costs, estimated in advance for budgeting or costing. G, by control, controllable costs, costs that can be influenced by a manager, e.g., overtime. Uncontrollable costs cannot be influenced, e.g., allocated head office rent. H, by normality, normal costs, incurred under normal operating conditions. Abnormal costs, unexpected or unusual, e.g., fire damage. 2.3 Cost behavior analysis. Understanding cost behavior is essential in planning and decision-making, especially for break-even analysis, contribution margin analysis, cost volume profit, CVP analysis, budget forecasting, A, fixed costs, Remain unchanged in total but vary per unit as production increases or decreases. B. Variable costs. Total cost changes in direct proportion to activity. Cost per unit remains constant. C. Semi-variable costs. Example, electricity bill with a fixed monthly charge plus variable usage cost. D. Step costs. Dot. Costs that remain fixed within a certain range but jump when activity exceeds a threshold, e.g., hiring a new supervisor after every 20 workers. Cost estimation techniques. 1. High-low method estimates variable and fixed cost components. 2. Scatter graph method plots costs to visualize relationships. 3. Regression analysis statistical method for cost prediction. Practical tasks for you. Develop a cost center structure for a manufacturing company. Create a basic cost sheet with direct and indirect costs. Compare financial and cost accounting roles using a real-life case. Simulate a cost reporting cycle for a single product. Identify possible cost units in healthcare, education, and logistics.